Hello everybody, welcome to the Fundamental Analysis webinar. My name is Troy. I'll be presenting this evening for AvaTrade. If you would, as we get going, let's do a quick systems check. Type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great, thank you. I have enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know in the chat box. Also, if you have any input you want to share that's pertinent to the conversation or any questions that you have, feel free to communicate those in the chat box as well. As always, keep in mind, there's risk with each and every trade that you take. No one trade is guaranteed to bring you profits, and each trade has the risk of losses. Now, with that said, each and every trade also has a good potential for profits, which is why we're all here, obviously. The key is to go after those potential profits in a way that manages risk that makes sense for you, whether you're using stop losses, hedge positions to back up your primary moves, or maybe some of the special tools that you'll find on our WebTrader or AvaTrade Go mobile app, such as AvaProtect, which helps you protect against any and all losses for defined periods of time. We'll go over how to use that feature, by the way, in today's session as we look at some live movements and potential opportunities. Now, keep in mind as we go along that what we talk about is meant to be from an educational perspective and not meant to be taken as financial advisement. Sure, Amutha, we can take a look at the Dow Jones, maybe the US 500 or NASDAQ as well, if anyone's interested. It should be some nice movements on those today after the Fed Chair Powell in the US spoke about upcoming monetary policy. We'll go over that soon in terms of what he talked about. It fits right in line with our idea of fundamental analysis. So real quick, if anyone's brand new to things, before we get into the actual news that came out today and the live charts, what is fundamental analysis? Well, basically, it's the news. It's the economic information that's coming out. There are a couple different main types that we look at. One would be regular economic events, like today's federal FOMC comments out of the US. It was scheduled. We knew the topics that they would talk about. We knew when it would be and what instruments likely would be affected by the comments. And so we would call that a regular economic event. Extraordinary economic events would be, maybe the Omicron virus when it first came out with the new developments, the mutations that occurred. The headline caught everybody by surprise and the markets went crazy. Now everyone kind of figured out that it's actually less dangerous than the original version, and everything has calmed down a bit on that front. But the extraordinary economic event, such as the global pandemic or other things that have happened in the past that are unexpected, you can't plan for those in terms of exact timing or what instrument for sure will be affected, because it's not the same as a regular economic event that's scheduled in advance. So we deal with both types of fundamental news, and a lot of times the unexpected extraordinary events we plan for with pending orders at unique price levels just beyond support or resistance levels, waiting for big breakthroughs that we would assume would only occur if there was some kind of big news that hit. And so and the same with our stop losses or risk management on the opposite side of important price levels for trades that we already have going, to account for unexpected news that could hit. We trade with what we know, we prepare for what we don't. And that's the way that fundamental analysis usually works best. So as we go along, questions, input, please feel free to ask or to share. Now, as we before we get into our WebTrader platform and the AvaTrade Go mobile app, which both have some great risk management features built into them that makes your risk management simple, and you can trade on both your MT4 and MT5 accounts using our WebTrader platform, which you log into from here, and using our AvaTrade Go mobile app, which you can download from our main website as well. If you go to trading platforms, AvaTrade Go, go here with your mobile device, and then you can download our app either from the Google Play or the Apple App Store. Okay. By the way, this is what the WebTrader looks like when you log in from here. Okay. Same functionality on the WebTrader as the AvaTrade Go mobile app. Now, what are the headlines today? To get a feel for the current fundamental news situation, what's the sentiment like? We can look at the headlines. U.S. stocks fall after Fed's Powell says 2022 rate hikes on the card. I think we all knew he was going to say that. We understood that the folks making monetary policy in the U.S. and really around the world, in all of the regions around the world, understand that inflation is out of control. At first, the policymakers tried to call it transitory inflation, that it was just temporary, it wasn't going to last. And now the realization has come over the past month or two that this is a problem, that the inflation is indeed hyperinflation, and so now measures need to be taken to slow the inflation down, to cut down on it. And so the things that help the economy do so well, the ultra low interest rates, the bond buying program in the U.S., the buying of bonds that was helping to prop up the banks in the economy, and other measures that were taken, all of the free money that was handed out, stimulus checks, etc. All of this helped the economy keep climbing through a pandemic. I mean, the stock market has been reaching all-time highs again and again and again through a global pandemic. And so the question is, what's going to happen when these stimulus measures are pulled back to slow the inflation down? What's going to happen to the stock market, which loved the low interest rates, it loved the bond buying program, it loved all the stimulus measures. Now, to get rid of some of the inflation, all of these stimulus measures are starting to be taken away. Interest rates are going to be raised, handouts are going to be taken away, etc. Then what's going to happen with the stock market? And we'll see. Today's immediate reaction when this headline came out, when Powell was speaking, was the stocks went down, gold dropped, the US dollar strengthened, the fear factor went up, and then all of a sudden it leveled off and everything went back up. And we see here everything is green now today. Volatility index is actually down, the fear index is down, and the US dollar weakened. So so much for the fear caused by the promise of interest rates being raised sometime soon. There was an initial knee-jerk reaction of fear, and then everything swung back in the green with volatility dropping and the US dollar weakening, as if the inflation is still there. And I think the idea here is they're saying that they're going to be careful about raising interest rates, although they say they're going to raise them. And so maybe some of the language that was used was seen as somewhat positive. Okay. We see Powell actually, if you look at a headline on Reuters, says that the economy can withstand the federal tightening and the Omicron surge. Basically saying they're going to tighten, but in a smart way. They're going to raise interest rates, but in a smart way, etc. Type okay if you're hearing me clearly. I have one person who's saying they couldn't hear, and I see they've already signed out. I haven't seen anyone else complaining. Okay, I've got enough responses. Looks like we're good to go. Okay, so with these headlines, what we're seeing are opposing headlines, right? One saying, wow, stocks dropped. Powell says they're going to raise rates. Fear went up, and that's exactly what happened. And then the flip occurred. The idea is, oh, it's not going to affect the economy so much if we raise interest rates, and up went the market in the green, fear down. Okay, so kind of a seesaw movement today. The bigger picture, the World Bank sees a sharp world growth slowdown, meaning the global growth was at 5.5%. And now they're expecting this year for it to be at 4.1% and next year at 3.2%. So a slowdown over the next couple of years in the economy is expected, according to the World Bank, And they're saying because of exactly what we're talking about. Interest rates are going to be raised back up from the different nations around the world. Stimulus measures pulled back. And so it's going to make it harder to do business, more expensive to borrow money and to grow businesses or to buy houses, etc. And so while those measures of raising interest rates back up, cutting back on stimulus will help kill the inflation, cut back on the hyperinflation, it will also be somewhat painful maybe, especially for the poorer nations, as the World Bank is saying. So even if the initial reaction today has been positive in the end, with markets going up, certainly raising interest rates is not necessarily great for business and could cause somewhat of a pullback, according to the World Bank, in the economy. Okay, so that's where we're sitting then right now in terms of the fundamental news situation. The U.S. news is driving the headlines today, as it many times often does, and we can understand why some of the instruments might have pulled down and now are rising back up. Okay, I think the bigger picture we understand is interest rates are going to go up. Inflation can't stay the way it is in a healthy economy. And so this hyperinflation is going to cause some pain as interest rates go up and stimulus measures get pulled back. That's the bigger picture. Even if the markets are rising now, the bigger picture is potential pain coming as interest rates might be raised and other stimulus measures cut back. Okay, so let's keep that in mind as we take a look then at both our WebTrader, if we log in here to do some technical analysis, and we'll keep in mind the fundamental news and how the fundamentals will drive our choice of which technical entry points and exit points we like best. So what I'm going to do is expand the view of our mobile app here. And let's take a look in the mobile app how we can use the features to help us out with our risk management as we go after trades that make sense fundamentally for us and also technically. Now, one thing I like to do is use some of the unique tools that are only available on the WebTrader and AvaTrade Go. One would be if you tap on this little tab here, you can get to some advanced features in this menu. Market Buzz gives you fundamental news on different stocks. Featured Ideas and Analyst Views gives you technical analysis. Since we've already done some fundamental review, we understand what's going on fundamentally today. There was some initial fear about interest rates and tightening of stimulus measures, but the market bounced back today. Now let's take a look at maybe what the analyst views are in terms of the signals coming in, the technical analysis. Okay, and so you can look at both FX pairings as well as cryptocurrencies in these signals. And these signals come in all day and they tell you when they're good till in terms of the price levels. So even if the signal is an hour or two old or even older, you can look at the price levels that are recommended for entry and exit and what price levels they're good till until to see if you still would want to trade on that. So we see USD Canadian intraday under pressure. Now, does that make sense that the USD Canadian might drop today? Well, with the economy and inflation soaring, that's got oil prices up, right? And with the USD weakening today with inflation fears on the US dollar, this keep in mind the interest rates haven't been raised yet, then it makes sense why fundamentally the USD might drop against the Canadian. If oil's up, that's good for the Canadian. Why? Because Canada's #1 export is crude oil. It's the biggest part of their GDP, I believe. And so fundamentally, as oil goes, many times so goes the Canadian dollar. So if the Canadian dollar is strengthening, that would then pull the USD Canadian down potentially. And if the USD has inflation fears, then it makes sense that the USD could drop even easier against the Canadian. So this signal seems to make sense. It says short positions, that means sell below 126.80. So if the movement went above 126.80, then they say something's wrong. it's not a downtrend anymore, then this signal's no good. That's what that means. Short positions below 126.80, as long as it's still below 126.80, then they're saying it's a downtrend expected, and they're recommending selling. And then it says with targets at 126.10 and 125.90. So right around 126 is the expected movement from a high of 126.80 down to 126. So let's take a look at this and see what's going on with the USD Canadian. You see the expected move. Okay, the take profit lines are here, the red lines. Take profit and take profit right around 126. Okay, remember they said 126.10 and 125.90. So this is a 20 pip range between the two recommended take profits. Why would they recommend take profit at this first line? Because there's a support level here. You see in the past it went down and bounced back up. So if it comes near that price level, they're saying that might be a spot to take profit. If you're more patient, they say wait another 20 pips and take it down here. And likely if we look at larger candles than 30-minute, we'll see that's another support level on the bigger candles, down 20 pips lower. So the technical analysis has been done for you. So this saves you time. We can see the price levels are drawn right where the support level would be expected. They drew your first take profit suggestion if you wanted to trade on this. So now the question is this something we'd want to trade on? And, you know, we could switch to smaller candles. And so let me go ahead and bring up maybe smaller candles, maybe larger candles. One minute. Let me go back a second. Apologize. Analyst views. USD Canadian, there's our signal. And let's go then to the chart. You can't tap on the picture I was trying to do there. You have to go to the actual instrument. So let's search for it. USD Canadian. Very easy to find with the search tool. And there we are. Now we've got the chart. And so if we go to the 30-minute candles, that's what we were looking at before. And you see the downtrend, right? Strong downtrend. And the question is this too late to trade on? Because they recommended the take profit around 126.10 or 125.90. Look where this movement already hit. 125.85. How perfect was that signal, right? How perfect was the signal? And had we done the webinar just 2 hours ago, these are 30-minute candles. 30, 1 hour, 30, 2 hours. Okay, 2 hours ago, if you looked at the signal, and the signal's been there for some time, you would see that you could have listened to the signal. As long as it was below 126.80, it said you should sell. Here's 126.80. It never went above that. So the signal was valid through all of this time. And you see it went all the way down right to the price point where they said the take profit would be a spot that you could expect maybe it would hit. So that's a quick 50, 60, 70 pip profit off one signal. Okay, and you see how the fundamentals line up, and we knew the fundamentals. Those articles I looked at were from 2-3 hours ago. We knew the fundamentals before this movement occurred. The signal came out understanding the fundamentals and the technical entry point, and you'd see how great this would have worked out. Now, unfortunately, I was hoping we'd catch it before it dropped. It already went. Now, if we go back, let's look at the timing of that signal. Okay, I'm going back, clicking on this tab, going back to analyst views, going to USD Canadian. And we see that this came out about 3 hours ago. This signal came out 3 hours ago. And we just saw that 2 hours ago, it was 60 pips higher, up closer to 126.50. And now it's all the way down at 125.85. So what a signal. Now, why is it that we were able to skim through these signals and pick one that worked so well? Because we aligned the technical signal with our fundamental news that we understood. The power of aligning the fundamental analysis with your technical analysis is demonstrated with this signal. Came out 3 hours ago, okay? It says 5:04 p.m., right? My time is way past that, all right? And so it's clear that signal worked out. Now let's try to find one that maybe hasn't occurred yet. Analyst views, let's do it again. We'll take a look at one more, and then maybe we'll look at it on the WebTrader to give you the full screen view. But you see how well you can function completely with the mobile app as well. The charting maybe is not as easy to do on the mobile app, but you've got the signals doing most of the charting for you anyways. GBP USD is expected to drop. They're expecting the pound to weaken even more so than the USD. Because the USD has so much inflation on it, maybe I don't like that signal so much. Does that make sense? USD JPY expected to rise. Euro USD expected to drop. Australian USD expected to drop. USD ZAR. Let's look at, perhaps we get a bounce back move on this GBP USD on second thought. If initially the USD strengthened, which it did when Powell was speaking, then it weakened. Now maybe that all of the seesawing movement has finished. Perhaps the USD will strengthen back to pull the pound down because of the fact that people realize interest rates will be raised sometime soon in the US, which should strengthen the currency, you would think. So let's take a look at this signal and see if there's an opportunity to make a move that hasn't occurred yet. Short positions below 1.36, $1.36, with targets down about 50 to 65 pips. Okay, so if we're still below $1.36 and we like the price point, they're saying sell. Okay, as long as we haven't hit 135.50 or lower. Okay, so GBP USD 136 or lower. All right, let's take a look at that on the WebTrader. So I'm gonna get rid of the app here, and let's then take a look at the WebTrader, which you'd log into here. Type OK if you're with me and seeing the WebTrader on my screen now. All right, great, thank you. That was a quick response. All right, so let's then bring up that GBP USD. We'll expand the chart. Okay, sterling dollar. It's sterling is another name for the GBP. And we see that they're saying as long as it's below 136-ish, then it's okay to sell. All right, so we see the resistance level here. It tested breaking above there on the 1 minute candles. Resistance, 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 and starting to drop some. Let's go to 1 hour candles. Okay, they say the take profit is down here, that's suggested. Down near 136.60, 136.50. So let's look at this support level if I want to draw that. You see, this is an old resistance price. Resistance, down. Resistance, down. It broke it once and came right back below. Resistance again. Resistance, resistance, back above became support. It seesawed through it, and it became support again at this price. So I see why this is an area where they would say maybe take profit around 135.60, 135.50, because there's some support. You see here it bounced up off that level just a few hours ago. So if that's the case, and we say, all right, we haven't blown by 136. Technically, it did go past it, okay? But if you like the price and you think there's a possibility that the USD could strengthen now with the understanding, the fundamental news that, hey, Powell says we are going to raise interest rates, speaking from his perspective, saying we are going to raise interest rates in the US, well, then it makes sense that the US dollar could strengthen now after all the up and down movement. Here's the down, here's the up, and then this would be your resistance level. So you might say, okay, let me sell on GBP USD based on those fundamentals. And the technicals align with that signal, and we're right at the upper limit of that signal, perhaps a little past, but the resistance has formed now, and we don't have to risk much to get above that resistance. So it's almost like a free shot at taking a trade with that signal, where you only have to risk a little bit to get above today's resistance, today's high point. And the potential profit is really large compared to the risk to take your profit before this support level and to risk only the amount from where it is now to above that high, today's high at that resistance level. So if I say, okay, I'm going to sell, and I maybe say I only want to risk 1% of my balance, which would be about 960, okay, or about 1,000 on this demo account. So if I say I want to risk that amount, then I can put my stop loss at the price that I think makes sense, which would be 136.30 maybe, up above this resistance. So 136.30. My take profit is down here at 135.60, just before the support level. So we see how that signal's helping us out. We're putting our take profit where the signal said. We're putting our stop loss above the resistance level that if it breaks through that area, the signal says it's no good anymore. And we're going with the fundamental news that interest rates are supposed to be raised. Makes sense. US dollar should maybe strengthen right now. Pull the pound down. Okay, so with that understood, now we start to adjust our trade size to say, here's my possible loss to that stop loss price. And if I know, hey, I'm good risking 960, well, then maybe I go 2 lots. And I say, how much am I risking? 284. Okay, so I go 6 lots. I see I'm risking 876. Getting closer, 600 or 6.5 lots. There's my 900 or so, just under 1% risk. Okay, approximately 1% risk. I could go a little higher, 6.75 lots, and now I'm risking darn near 1%, almost exactly. And so, 960 would be 1% of this available balance, and I'm risking 945, so almost right on. And I could even be more exact if I want. Okay, 6.8. There I'm almost exactly 1%, 9.77. You get the idea. So it immediately adjusts my possible loss and tells me what I would lose to that price, my stop loss. Okay, so and the move's going our way because the possible loss just jumped up, still right around 1%. So my take profit is more than triple my risk. So you can see your possible profit, possible loss to the take profit here and the stop loss up here. So if I'm good to go, I click sell. Okay, so now I'm in on a position that makes sense technically. There's a resistance level here. We can see in the 1 hour candles. We're above that resistance level without much risk percentage-wise on the balance. And our potential profit is more than triple, taking profit before this support level down here at this price here. And the whole move, besides being sound technically in terms of risk reward, selling from a resistance level, taking profit before the support level, all the technical analysis makes sense, but also fundamentally it's solid. Okay, Initially, there was fear that about the interest rates going up, market dropped. Then there was talk about, hey, we're going to do it in a smart way. Market went back up, stabilized at a resistance level. Now that time has passed since the announcement and the talk, and people can think about and digest what really is going to happen over the next quarter, maybe, or a couple quarters this year. Interest rates being promised basically to be raised, bond buying program being promised to be tapered away, makes sense. The US dollar could strengthen with that mindset. And so fundamentally, it makes sense. Technically, this move makes sense. Obviously, it could lose still, right? Which is why we have our risk management built in. We understand the exact percent risk to that price, our potential profit, etc. And we could do the same thing with another instrument that makes sense with today's news. How about gold? Okay. When there are inflation fears, let me give a quiz. When there are inflation fears, what does gold usually do? Gold being a safe haven for inflation, what does gold usually do when there are inflation fears? When inflation is high, which way does gold usually go? As the US dollar is weakening with inflation, what does gold usually do? Yep, right on. I see everybody saying gold goes up when there are inflation fears. Exactly. What do you think would happen to gold if the opposite was occurring? If interest rates are going to go up to stop inflation? If bond buying programs are going to be tapered off to stop inflation or to slow it down? If the US dollar is going to strengthen because of interest rates going up now to stop the inflation, what then makes sense for gold's path? If gold goes up with inflation fears, if the idea now is measures are going to be taken to get rid of inflation, i.e. raising interest rates, cutting back on stimulus measures, then it would make sense then that gold might drop as inflation fears are stymied. Okay, so let's take a look at what gold did today. If we go to the 1 hour candles, we see gold went rushing up. Why? Because interest rates haven't been raised yet. There's super inflation going on around the world. And so up goes gold. But think about the fact that what Jerome Powell said today. Yeah, Nelson, usually gold goes down if you take measures to get rid of inflation. And so in the short term, could gold keep climbing? Of course it could. In the bigger picture, if you're a longer term trader, if interest rates over the course of the coming months are going to go up, if stimulus measures are going to be pulled back, and in which case currencies should maybe strengthen, that's the opposite of inflation. That's what maybe is expected to come eventually here. So if you look at that view, understanding you could be wrong, gold could just keep going up because there is still inflation right now. But if you take the bigger picture view and you decide, okay, I want to sell on gold then. Okay, no problem. By the way, you can add AvaProtect on here if you're doing shorter term trades. You can protect by the hour, protect by the day. So if I'm going to do a couple days trade and I want to sell on gold right now, with this trade size, it would only cost me about $43. And then I don't have any risk for those 2 days. Gold goes down or whichever way I'm trading, I have unlimited profit potential, and I'm only risking the cost of the protection during the protected time period. So that's an option. If we're talking about a longer term move, then AvaProtect wouldn't be the way to go. Let's look at, say, 1 day candles. We scroll back and we say, okay, see some price levels I've already drawn. There's a resistance level here at 1832. Perhaps gold will go up and challenge the resistance at 1832. But with all of these with all of these nations, and with the understanding of many investors that interest rates are probably going up soon, maybe that would keep gold from breaking a resistance level like we see here on the 1 day candles. Resistance, resistance, resistance. It broke through but came right back down and again acted as resistance here. So if you're if your understanding, if what you believe is, hey, currencies should strengthen as interest rates go up, then while in the short term this could go up and challenge this resistance level, if you believe it won't break it, then this is a perfect opportunity on a longer term move to maybe short gold. Okay. And so that's the resistance level on the 1-day candles up around 1832. So if I put my stop loss at 1835 to clear that resistance, or maybe even higher, 1840. Okay, and I put a take profit at a support level down here on the 1-day candles. Okay, it hit this price not that long ago, just a few days ago, and bounced up to here. So it was down at 1784. So I could put take profit 1784. Okay, and that's not being greedy. Could put a take profit at a lower support level, but we're taking the first 1-day candle support that we find, which is right here. So it doesn't have to break any 1-day candle support levels to hit our take profit at 1784. And you see the potential profit is much better than the risk. Profit 177 or so, risk 102. So now we can go to our risk management. And again, if I say, okay, I'm willing to risk about 1%, so now I start putting lot sizes. So if I put 1 lot, I say, okay, I'm risking over 2%. So I say, okay, I don't want 1 lot. Let me put half a lot. Okay, now I have half a lot and I'm risking about 1,000. Could go down just a little bit, 0.45. Now I'm risking 940, which is about 1% of the 94,000 in the demo. Okay, and by the way, there's 1%. I'm not saying you should or should not risk 1% per trade. You can risk more, you can risk less. That's up to you. The point is you should know how much you're risking per trade. It shouldn't be a situation where you take a trade and you have no idea how much you're risking. That's what this helps you do. This order window on our AvaTrade Go app and on the WebTrader shows you what you're risking to the price that you're putting for your stop loss. Shows you what your potential profit would be. So the profit much nicer than the risk. With this setup, if I like that entry, whoops, I wanted this on sell. That's why it didn't allow me to take those prices. When I changed the trade size, I think I accidentally switched it to buy. So let me put those prices back in. My take profit I had at 1784. My stop loss I had up at 1840. You see, it's foolproof. Didn't let me buy on a trade that doesn't make sense with the take profit and stop loss. Okay, so now I'm set up. My potential profit, much better than my potential loss. I already know the trade size I wanted, right? 0.45. Risks approximately 1% of my balance with a much better return. Now I can sell. Okay, there we are. And so again, let's review. We sold on gold because with central banks, basically, and specifically the US FOMC committee saying, hey, they're going to raise interest rates this year multiple times. They're going to cut back on the bond buying program, cut back on stimulus measures. You would expect, hey, the USD should probably strengthen. And if those are anti-inflationary moves, that puts bearish pressure on gold if inflation fears could drop. Okay, so with that fundamental understanding on the 1-day candles, we find the resistance. That's a resistance level that was tested multiple times and only broke once. And so in the last 1, 2, 3, 4, 5 attempts, it only broke through once. And so with those odds on our side, we put our stop loss above that resistance and our take profit before the support level with a better potential profit than risk. So the technical analysis is on our side, the fundamental news is on our side, but we understand that you could lose still. So we set up the risk appropriately for the amount that you want to risk, whether that's 1%, as in my example, or maybe you want to risk 5% or 0.5% or whatever the case may be. John, yes, webinar is still on. Let me tell, he's been having problems the whole time. John, it is just you with issues seeing/hearing. Okay, there we go. All right, let me open it up, ask for questions. I think we've been going long enough, almost 45 minutes. We get the idea. We can see what's happening. You could look at the major indices. Actually, the request was made for the Dow Jones. I apologize. Let's look at that real quick. So the US 30, which is here, that's the Dow Jones, US 30. And so let's look. These are 1 minute candles. Let's go to 1 hour. We're going to see it's similar to gold, right? Let's go to 1 day candles, or 4 hour maybe will be better for us. And we see an old support level and a resistance level right here. Okay. This was support up, support up, support up. It broke through, kind of went seesawing along the support and resistance level, and then once it broke, it went down. Now it's acting as resistance here. So just like gold tried to climb today and hit a resistance, so too has the Dow Jones. Now, if stimulus measures are going to be cut back, if we expect interest rates to go up and the US dollar maybe to strengthen, usually stocks tend to drop when that happens. Okay? It doesn't mean they have to drop now, but the fundamental news says, hey, maybe this resistance level, this old support level holds. And you don't have to risk much to take a shot at the fact that, you know, maybe this talk about raising interest rates could strengthen the USD and pull the stocks down temporarily. You don't have to risk much to go after that fundamental setup if that's what you believe will happen. So just like we did with gold, you could set up for a sell with your stop loss just above this resistance level. So your stop loss could be like up here above this resistance at say 36,250, or even a little lower, 36.2 would still be above this resistance level here. Okay, above this old support level, 36.2. So stop loss, if we put 36,200, whoops, 36.2. Careful where you click or you reset what you put. Take profit down here on the 4 hour candles before this support level, right? Here's a support where it hit and bounced. It got closer and bounced. So if you take your profit, say before this low point, that's well before the support level down here, okay? So if you say you want your take profit to be here, that's still, to the eye test, about 2 to 3 times, 2.5 times more potential profit than risk to the stop loss, okay? So if we put take profit then at 35,650, that gets us out. 35,650 gets us out before any major support levels. And you see the potential profit more than double the risk, about 2.5 times potential profit compared to risk. And the fundamental news is kind of on your side here. So the technical analysis definitely is on your side. So now we just, again, do our risk management. If I know I want to risk about 950 or whatever the case may be, then I put my lot size and see what that gives me. Okay, 1 lot is a bit too much. So I can say 0.5. That's a little less than what I'm willing to risk in my fictitious example here. 0.75, a little high. 0.7. 0.6. See how easy it is to put the lot size? Here's my risk, 972. That's close to 1%, almost exactly 1%, around 970, 960 risk on my balance. My potential profit over 2,300. Okay, if I like the setup, I sell. Okay, very, very simple. Technical analysis has got my stop loss above the resistance, got my take profit before the support levels, and the fundamental news makes sense that it could be with this move, that there could be a pullback in the major indices with the understanding that stimulus measures could soon be taken away piece by piece over the coming weeks and months. All right. I think this is a good place to stop. Any questions, comments before we end things this evening? Okay, great. Thank you all for joining. I don't see any questions popping up. There's a lot of movement yet to come tonight. I think if you take a look, find the price levels you like on the instruments you like to trade on. Keep in mind the fundamental situation we talked about, and take the entry points and exit points that make sense to you. Yeah, Glenton, you can change the stop loss at any time. You can go into the trade and change the settings. I'll show you how to do that. Click on positions. I could go to, say, this gold trade. You see here the pen. Click on the pencil or pen, and now I can modify the trade. So I can change the take profit, the stop loss, and then click update. Okay? Very simple to do. Just click on positions and then click on the pencil or pen, and that allows you to modify it. David, good question. There are small overnight interest fees called swaps for trades that you hold past 5 p.m. New York time. That's the official end of trading day for most brokers, 5 p.m. New York time. So if a trade carries past that time, there's a small overnight interest fee. It's a small fraction of a fraction of a fraction of 1% of the trade size. But if you're holding trades for months at a time, it starts to add up. If you're holding a trade for a few nights, something like that, even a few weeks, it's not a big fee that adds up. It's pretty small. But good question. And those interest rates are listed on our website, by the way, under the trading conditions. All right, everybody, thank you for joining. Good luck with your trading. I think you'll have a lot of nice movements, maybe some rebound movements, pulling back or bouncing back up after the initial whipsawing that occurred today. All right, good luck. Bye for now.